Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So the performance of the last week was rather dramatic, although on the high time frames we do not see it. But if you just will take a look at the performance on Friday, it was total madness. So in general, we could say that market has completed all targets that we have specified. First of all, the minor hand and shoulders has failed. As we suggest that market has completed the butterfly on the 4-time frame chart, now we could consider larger larger hand and shoulders on the hourly on 4-hour time frame chart. But it has made in so sophisticated manner that I suppose not many traders were in time to take the position. So we'll take a look at it a bit later. Currently, speaking about the daily picture, here's a few important moments exist. First of all, as a result of recent turmoil on the forex market, we've got the high wave pattern, which is not really very good. It's a bit tricky to deal with this pattern. It's not as bright as other patterns, and it absolutely doesn't tell us the particular moment in where the breakout could happen. But what I think important to say is that on the weekly chart, guys, we have the bullish trend. And if even market will show downside breakout, it will not hurt the weekly direction, which means that on the daily chart, it might be deeper retracement. If, of course, high wave will be broken down and confluence area will be broken down. Based on this performance, as we said, this is not typical performance for the bullish market. I suggest that it's, well, the chances for that are not very small. Especially if you will take a look in our report on the weekly chart analysis, you will see that here market has formed something that reminds, right there, something like that reminds bearish evening star pattern. It doesn't look perfect, but still, this might be the bearish pattern that's just deeper downside action. Divergence is still in place. Currently, we do not have stretch pattern anymore because the pullback was in excess of the 30% retracement of this downward action, and market is not at the sold anymore. So that's why the particular support comes only from the confluence area. So that's what is important to know right now. On the lower time frame, take a look what we have. First of all, we've got the freak double repo pattern, because the completion of the pattern has happened right at the same bar as it confirmation comes. So market first touched the target, which was the 50% level of the downward action, and has closed right now right there to confirm the pattern, which just makes it mostly impossible for trading. If, of course, you haven't taken a long position based on the butterfly that we have discussed. But I do not see any reasons to regret about that, because here we have something better, and you already could see it, that I'm speaking about the big hand and shoulders pattern. The scale of this pattern, which is rather extended, is, well, fits very well to the scale of the weekly chart, weekly daily analysis. Because minor patterns are too small to speak about the weekly chart using some minor candle patterns from the 4-time frame chart. But extended pattern here is very important. What we could say about this pattern? This pattern looks very good. Why? Because take a look, we have slowed down on the upward action, acceleration on the slope of the head, which is bearish, and very choppy and not really not perfect right arm, which suggests the weakness of the bulls. So market was not able to form even more or less solid pullback right there. Chances on the downside action, which actually might be to the OP around 107.35. It is not critical for the weekly bullish trend, so it easily could absorb it and trend remained bullish, but it is rather good target and more significantly extended to the downside, especially for intraday trading. And I suggest that we need to pay attention to this pattern. So and finally, what we have on the follow time frame chart, we have vital area for the bears. So market should not extend this level. So if it starts moving higher, moving closer to the 1075, it means that probably this pattern is failing and market is preparing for upward breakout. But until it's going around 110, 110.50, this is acceptable. So where this right arm might be formed, or maybe it already has been formed with this spike up, it's also possible. And it's suitable for the bears. The bears right now has only one task and question: how it would be better to take the position. Once again, it might be using gradual entry step by step. For instance, take minor position here. If we'll get some upward continuation, you could add the bulk of your position around 110, 110.50. And on average, it will be a great entry around, well, maybe somewhere around 109.75, 109.80. If you take position here for 30%, for example. Of course, you could just wait if market will bounce to this area. For the bulls, there's only one pattern that might be traded because daily trend stands bearish. We don't have anything for trading on long side on the high time frames. But on the hourly chart, if you're a scalp trader, you could consider the same pattern that we talked about on Friday, which is actually kind of the head and shoulders, larger head and shoulders. Recall what we said, that potentially the head, we thought so it should be the head, but in fact it has become the shoulder. And we talked about this in Friday video. And it really has become true. So market first has erased the head and shoulders that we talked about as we suggested. Then it has completed the butterfly that we also discussed on Friday. And finally, it has completed our target around neckline, retest the confidence. That is also as we suggested. But as I said, it was very sophisticated performance, and well, it was really difficult to take position with this trade intentionally. So hopefully, maybe somebody of you was in time to do this. So currently for the bulls, there's only one question: whether you would like to take the position here, because this is the point where you have to make the decision, where potentially right arm stands. Your bet will be on a possible A, B, C bottom, some upper action, A, B, C, D performance. That's the only setup that bulls could consider right now. For the bears, as I said, either to wait for a bit upper continuation based on this momentum, or take this gradual entry in this trade step by step, but taking first part here, maybe if the retracement will happen, take the second part somewhere where it will be over. For the bulls, important sign to consider is watching for market performance. If it starts to ignore this impulse momentum that we've got on Friday and starts falling down back to the XOP, back to the 109, it means the failure, and it means that market will continue downward action immediately. So no hand shoulders will be formed. But also the positive way currently possible when as the bulls, as the bears could make some money. So bulls could make the money on this upper scalp trade, while bears could get better entry if this scalp trade will be successful. That's actually, in 2 words, what we intend to consider in the beginning of the next week.